The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento, who I believe will be back next week. So it's my pleasure and privilege to have been here, and I hope in some ways I helped with this is the Commodities Hour and the Futures Hour. And I will certainly do my best right away to go straight into the futures, looking at currencies as well. Well, let's hit the spot right here. Here we go. Looking at the euro-dollar currency pair, it made a peak. Let me quickly just tell you. In the Chapman wave, one of the prerequisites, one of the things we look for is a sense of, from a most identifiable lowest low in the Chapman wave, to see each successively higher peak come in and label them peak A, capital B, capital C, capital D. At that point, you can continue in that direction, but you can also turn around. That's where other things come into play. So the concept is very simple, and the implementation at a certain point goes from being simple to a little bit more complex. I'm not going to say difficult, it's more complex. Later on, it does become difficult because we get what we call an alternate wave count. So in the wave count, it becomes difficult. But in reality, as long as the technicals are strong, and I'm going to show you examples of this, there is nothing to do but to allow the chart formation to tell you the story, because it's acting very well, so you can keep that what I call alternate count going. So now the euro has had two consecutive peak Ds. It went from a low of 1.20417, that was the low on the 24th of July, to a peak at 1.2588, and that was on August the 23rd, 1.2588, pulls back for 2 days, then breaks above, and starts what I call a brand new buy mode, holding the 9-period moving average, the MACD. Oh, let me talk about this. In the futures hour, in the futures hour that I'm showing you right now, but also in my own show, which is called the Tiger Technicians Hour, as well as in my service, which is the opening call. That's a daily service, an intensive service. I look at everything that's important, the stocks, commodities, TLT, bonds, dollar, whatever it is. Every single day I give parameters for these things, or I talk about the trend. I give technical tools. I show the different techniques in the Chapman wave that we use, whether it's the short-term trading index, the trend with a Chapman wave methodology. I call it the Chapman wave trend gauge, or if it's a volatility index. You know what I've been saying for months and months and months. Dow holds under 20. The VIX holds under 20. The market should benefit. Bonds start to three bears. Bonds, I call Bondy. The VIX, I call VIXY. And the dollar, Dolly, I call the dollar, which is what I call Dolly. If the three bears are weak, it allows for strength. Right now, we're getting a little bit of a toppiness in the daily charts of gold and the euro dollar. And I've got wave counts in the Qs, which are in legs D, probably making a D, and we'll go through that in a moment. So I wanted to show you this chart. We've stopped at a peak D. Then there was a restart in the Chapman wave in the euro, and we went A, B, C, and the last one, which with a technique I call the silent doji, came in on the 17th of September, having hit 1.31688, and that 688 is actually quite important. Why? It's important because the result of work that I do on my doji on the doji candles, those are candles that look like a plus sign. They either look like a plus sign or a very long-legged plus sign. There are special techniques that I love to use, and those particular techniques are the techniques that, in fact, I use for subscribers I show every single day where we are. And here we are at a peak D, and that's where you can expect either the quickest pullback or a longer pullback than you've seen before, or it could be price, or it could be time, or it could be price and time. So what you've got here is a pullback in the euro from 1.3161, and to today's low of 1.29186. That's the deepest slide you've had in the euro since back in the doji candle of the 19th of July, and we came tumbling down. We're going to go to our first caller. We've got Ilke in Boston at 877-927-6648. Hi, Ilke. How are you?
I'm wonderful, Basil. How are you?
I'm very well, thank you.
And your family, did you go to New York?
Yeah, we were in New York, actually. I had a very exciting time. My brother from Australia came especially to visit with his wife, and we just had a fantastic time together. Actually, I had an incredible experience because my brother had read somewhere that there was an open house or an open rehearsal for the New York Philharmonic for Wednesday morning. And it turned out that we got into line, and I couldn't believe that it was there. This is opening night. Wednesday night was opening night of the season. I've never heard of an orchestra having a open dress rehearsal in the morning. So I went there, and it was just fantastic. It was the Rite of Spring, and it was a young conductor, Gilbert is his name, and he's been the principal conductor of the New York Philharmonic for a couple of years. And it was really exciting. There was a contemporary piece by a composer called Kurtag, who's probably Hungarian. And this was written in 1988, and it had players up in the three tiers, up in the corners of the Avery Fisher Hall. On all three tiers, there were brass players and wind players and harmonica players, a whole four harmonica players, plus timpani and pianist on stage with the conductor. So it was very exciting. Then the Beethoven Third Piano Concerto, with a wonderful pianist. So I had a great time. It was really nice, and it was relaxing, although I managed to get my opening call out and my service out every day. So your question is...
I have actually I need couple clarifications from you. The new A count that you have is, first of all, lower high than the D, and the red candle, which is lower than, and I'm talking on the daily, I'm sorry,
yep,
which is lower than the lowest low after peak D. So my question is, because I actually have a count as a C, not a D.
A G or a C you have right now, correct?
That is correct.
Yes.
So I need a clarification, because to me it didn't go over D, so I couldn't do the instant restart, even though that was the third candle. And also, although it has everything that looks like it, it didn't, so I had to rename it.
And it came out on the fourth. It was on the fourth candle instead of the third.
But the thing that the two candles, meaning the green and the red after the peak D, meaning the new A that you have.
Yes.
None of those are higher than peak D.
Absolutely correct. So this is very interesting. When I did this, as I was doing it, I was saying, I am absolutely sure that I'm going to hear from a couple of Chapman waivers who have done the more advanced courses, and they're going to say, huh? And I, in fact, have a special section in this. I don't really want to call it a book, and I can't call it a notebook, because it gives great examples. I have a special page under H, right here. There it is. Well, it's not a CD yet. I'm still putting it together. I don't know how to even do it, because it goes on for about 100. I don't know if it's maybe 80 pages. So you can't have 80 chapters. You know what I mean?
Yeah,
but there's under H. I've done it alphabetically. Under H, it's got huh. What was that? And that's exactly. And as I was doing it, I was saying, I bet I know who I'm going to get a call from. I should have written it down on the chart saying, I bet I'm going to get a call from Ilka, because you do. There are a number of you who do a tremendous amount of work on the euro dollar, on the currencies, etc. This fits it. So, folks, this is what we're looking at. I'm going to make it as easy as possible so that even if you aren't used to the technique of the Chapman wave, this will describe in great detail exactly what my thinking is. Because you remember, right in the beginning, there were many people who said, I have a problem with the restart. And I used to say, think of the restart as one of those patterns that's either like a dreaded H, but it's a successful pattern. It's a successful test of the low. It doesn't break the previous low. So the whole thing about the Chapman wave is that there are concepts that have to remain pristine. I cannot change them. But what I can do is take them and push them to the next level, because it's a natural outgrowth and a consequence of what we see. Now, let me explain to you so that the folks listening at home, and if you have the chart, you can I go to EUR USD, that's the Euro US dollar currency pair, and Larry talks about it a lot, so I'm very pleased that we're able to do it right here. The low bar, the doji low that was made at 1.20417 on the 24th, came after the silent doji. That was a hint that there could be a turnaround. It goes up to a peak A at 1.2389 on the 27th. It pulls back, then it makes a higher high, slightly higher high, 1.24 on the 2nd, was that the 2nd? On the 2nd of August. Pulls back again and goes slightly higher to a doji candle of 1.2442 on the 6th of August. Then it pulls back and takes a longer time. It makes that pattern I don't want to make it too messy, but it's basically a cup formation and a breakout that in the Chapman wave, cup and ladle formation, says that it should go to D. Well, that happened to be leg D. So on the one hand, I'm looking at everything fitting into place, and on the other hand, I'm looking at the MACD, the moving average convergence divergence. Folks, if you're looking, I wonder if I can do this just for the moment. I'm going to get out of this chart. I think I've got it in a different color, lighter color. Let me see if I can make it a little clearer. So here we go. I'm going to go to the white background. I think I've got the EUR USD. I've done so many charts. Okay, here we are. EUR USD. Great. So this is what I'm looking at here. I kept this formation intact as a pattern that I knew most folks would be looking at if they were used to the core understanding of the Chapman wave. This is the next step up. Now I'm going to get rid of everything that you see. This is the daily chart, and watch me do it so that you can understand. Oh, there's the first break. Folks, we're going to use this as a great lesson in chart formation, chart patterns that repeat over and over. It's a trade what you see. It is also the commodity, the futures hour. For Larry Pesavento, Basil Chapman sitting in, 877-927-6348. Be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi everyone, Basil Chapman. Just explaining how we got the wave count in the Chapman wave. So, Ilka, you're still there, right?
Yeah.
Okay. So what I did was, the bar that made the low on at 1.24647 on the 28th had a high of 1.25761. Now, how do you trade these when you're looking at them? Those extra, there are 5 digits after the dot. The reason why I wouldn't ever trade these based on the Chapman wave is because there are just too many numbers.
I actually only use it for the lowest low, only at that point.
Okay, all right, fine. So now look what we've done. We've gone to a lowest low on the 28th, and the very next bar has a fractionally lower high, correct?
That is correct.
Okay.
That's where I'm having problem with this
Okay.
day.
So what I did was, it was a gray A that I put there, and I just forgot to recolor them. There should be gray B and gray C. I'm going to explain exactly what it is, and you'll see why. With the alternate wave count, together with, it's a funny thing. As I did it, and I did it before we got to the top, I already went back and I said, something's wrong with this picture, and I explained what I was looking at. The MACD never got even close to the fast-moving average. That's why I wanted to mention, for those looking at Tiger TV, you'll see that the yellow line didn't even go close to the red line. That's the fast-moving average and the slow-moving average. That's number one. Secondly, there was a little bit of a bump in the stochastic but a higher high on the next bar, and then it started to move up. So what I did is I created that as a phantom peak A, and the only reason I did it is it met all the criteria that if I had to put a down arrow at the peak D and an up arrow on the low, the actual bar, and my rule is that the low cannot be a high except in an instant restart. You remember?
No, that I know, except the high A is not higher than D.
Correct. But it is underneath. Then there's another technique that I talk about, and this is the technique that I actually use. It says that if after peak D, and there are so many examples of it, if you make the exact same number on the right for a new peak, or just a little bit lower, preferably, I would have liked to have seen that the low bar of A on the 28th was slightly higher, obviously, than the low of the 27th, and it wasn't. That would say, be careful, because that kind of action after peak D, the fourth highest peak, very often can take you to a whole new peak D. I'm trying to think now if I believe I've discussed it in my CD introducing the Chapman wave methodology. I've shown examples of it, but the instant restart happens so many more times that this is kind of more a background one. And that's the reason if you look at the white chart, you can see how nicely it works. It goes to almost like a double top. That becomes the bar that made the low. That's technically, that shouldn't be allowed, but everything else met the criteria to make that start an A, to B, to C. And the way I was looking at the stochastic is, I was looking, saying the stochastic starting to fail before it gets to a high. I didn't know it was going to get to a high, but it was starting to fail right on the bar that made the high. The unbalanced volume had turned down, not the unbalanced volume, the MACD, fast-moving average has turned down slightly. And if you look at your 120-minute chart here, I've got to keep switching charts. I hate to do that right now. The 120-minute chart had made a peak, there it is, had made a peak D. Am I correct? It was a D. Yeah, a peak D. So I had all the little pieces in place. Now, I don't trade this, so it's purely theoretical. If I was to trade it, I almost certainly would have had to wait for the bar after the doji, because you know my rule about the bar after a doji, how it has to close below it, and then it's the second bar that is really very important, followed by the direction of the third bar, which is today. So all of those things make it phantom A, B, C, D. And you could have gone in your way. There's absolutely nothing wrong in the way you did it. That would have been E. Let me make that yellow. I'll make that yellow, and you'll see exactly what I'm. So you've made a peak G top.
I have it as a G or as a C.
Right. So what happens is that at this point it could still be a C, right? Because we haven't even gone close to the low. But I like to be as conservative as possible. I've got this now as E. There it is. So that's E, okay. F, and we've gotten to G.
So the other question would be the silent doji. I thought that should be lower high than the peak before it.
All right, we'll get to that. I'll be right back with Ilona straight after this break. Basil Chapman sitting in for Larry Pesavento, and then we will also look at a bunch of the different commodities.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi, folks. We're back. Basil Chapman sitting for Larry Pesavento, and we're on with Ilke in Boston. And we're talking about the euro dollar and the alternate wave count. A little unusual, but let me just quickly refresh, Ilke, so that if you get 3 to 4 bars of a little cup formation under D, and it doesn't fit all the criteria of breaking above peak D within 3 bars, that's the rule, you can preferably, this is using the low bar as a high bar, which is very unusual, but everything else fitted it for it to be allowed in my case. But normally what I would treat that is if it was, say, the second bar, you would have no problem with that as well. If on the 29th it was fractionally higher, that would be an A, even if it didn't break D. And that would have said, aha, keep it in mind that you can use it because it's going to get you to your peak higher than waiting for one more peak, because you want to be as conservative as possible. You don't want to be aggressive because you want to know that you feel comfortable with your wave count. So that would have got you to G. Either way, you're at G, right?
Yes.
And the G said, and it's one of the ones that I like least because it's G/C, and you actually have to wait for a pullback because you have to say, no, we're not going to make that C. But by the time you recognize it, it's too late to actually put the trade on. But the clue was that technique that I use, that I teach in my Master Trader series, called the silent doji. And you can see that it worked beautifully here. But there's another technique as well that I've been discussing for months that I said works on monthly charts. And I'm working to see, very hard to see how many times I see it in weekly and dailies. Well, this is exactly that. That in the daily chart, you had a fractional lower high bar on the 15th and on the 17th, the second day after the high, and then you pull back. And this says to me, okay, be careful here just for a brief period, because that cup and ladle pattern says that you could come back and retest the breakout, which is the lip of, what did I say it was? Between 1.274 and 1.2746, and that would be the downside target. But you've got tremendous support of the 200 period at 1.285, 1.285 in the daily, and the 120-minute chart says I've got a left side price, right side price time match, which says overnight into tomorrow there's a chance that you could drop and retest the 1.28s. So that's kind of what I'm looking at. What would break the pattern? If the doji that we're looking at, the 120-minute chart with a stochastic, which is flat, but if it's suddenly the stochastic can go over 23%, you'll get a pop up to about 1.29. I suspect from what I'm looking at in the chart, the market needs a pullback. The euro dollar and the euro currency itself look to me like they need a bit of a pullback, just a timeout. I don't think bonds are going very much further at this particular point. They can go a little higher. Just a brief pullback in this digestive phase as we've made these highs in the euro. Gold's, I think, in a similar situation, a little pullback here, and the general market. There are still too many stocks that look very strong.
So the one little thing, so the doji that you have as a peak D,
yes,
is slightly higher, not lower than the previous candle.
No, 1.31681 on the 14th, 1.31716 on the 17th.
That's higher.
1.317. Oh, you're absolutely right. So
that's not silent doji, correct?
That's a doji.
A doji. Okay, very good. Thank you very much.
Thank you. Boy, I hate these 5 numbers after the dot. It's horrible.
Have a good one, Basil. Talk to you later.
Now I have a good one. How can I have a good one after all those numbers? I'm totally confused. Thank you for calling. Okay, so this is what I said we would do. Here we go. I'm going to just run these down as I saw them go by. HGZ12, that's the high-grade copper. High-grade copper's had a fabulous move. Look, it's making a peak D in the Chapman wave. You went to high-grade copper December. That's the low is 3.3010. I like it. You can have 4 digits is fine. 3010. It goes to peak A on the 7th of August at 3.46. Pulls back. It goes to B on the 23rd of August. 3.51, pulls back, stair-step moves. This is a technique that I call the falling axe. That's that rising wedge. Lower highs and lower lows to make a wedge pattern. As soon as you break out above it, that's very positive. It's also the cup and ladle formation. Snap through says you can go to a leg D, so it goes to peak C on the 3.83 on the 14th of September, pulls back and makes a modest new high at 3.839. What does this tell us about copper and the market itself? Let's go to the continuous contract. Here we go. There we go. I'm not going to use the daily. The dailies are not usually very good at the continuous. Look at this. It says that copper has made a very nice bounce. We've got to call it a bounce right now in the weekly chart. But the MACD climbed to 89%. That is a good sign. And then the MACD, the stochastic rose very strongly, and the MACD is up very nicely. So that says that this particular move has the capacity, has the capability to try to get to the next most important high. So that's 8370. Yeah, 3.83 was the most recent high. That was last week. The previous high of importance was the week of the 4th of May, 3.86. If it breaks that, then you're looking at the high of April the 6th at 3.9. Well, what does that say? That says that as long as copper's rallying, we've got some economic activity that seems to be pretty good. That's number one. Number two is, as long as copper is rallying, that H formation that could be deadly in the monthly chart, especially the monthly chart, is acting very much like the GCZ contract, which made the same pattern. There it is. Let me go to it in the GLD just to show you the actual pattern. There. See that H pattern? And then it rallied back. And now what's happening is that the GLD is attempting to test 174, the high of the month of February of this year. and the stochastics moved up. The MACD is still not great, but it is moving higher. So much for, that's what I'm saying, that chart patterns repeat. So let's go back to the HG, that's high-grade copper. And then HG contract says, having successfully tested without breaking the 3.0535 on a retracement level, that was the low of the last year in October, there's a good chance that high-grade copper could in fact retest the arch formation high, which is $4.008, made in February of this year. That's very important. So high-grade copper is acting well, not great, but it's acting well. That's number one. Number two is the weekly chart. We'll see how it closes Friday, but if the weekly chart closes nicely over 3.63, it's a 3.77 right now. That means it's for 4 out of 5, 1, 2, 3, 4, 5. For 5 out of 5 weeks, it's closed above the 9-period exponential moving average as the technicals improve and is making a potential arch formation. How does it break down? If it slides under 3.63 and then 3.60, then the 3.59 is the 200-period exponential moving average, and the stochastics at 89%. Then stochastic would have to drop under 80% with high-grade copper going under 3.54. That would be the continuous contract. Now have a look at this. When you're looking at the dollar DX, should I go to the dollar? I'll go to DXY for the moment. Look what's happened with the dollar. Let's skip the weekly chart just for a moment. We're going to go to the daily. The daily has met resistance right at the 79.57 9-period exponential moving average, but it's hugging it. It's getting close. This is just a leg A after a horrible decline. So this means that unless the dollar, the stochastic, which is 17% in my work, the stochastic is very important, needs to get way above 25 into the 30s to really show that it's got strength to rally further. And the MACD, which has not yet crossed positive, the yellow line over the red line, that's not good. It needs to decisively close above it. And the weekly chart, technicals, stochastics just trying to turn around, but the MACD is going to take quite a while to decisively turn up. So unless the dollar by the beginning of October, first week to second week of October, is up in the 82.10 area, any rally is liable to dissipate. And then, of course, we're looking at the euro-dollar relationship. And that would say that the EUR-USD has to hold on a pullback. If the EUR-USD pulls and breaks under 1.2701, that'll be a big negative, and that'll take the stochastic back under 80%. And that'll be a leg A to B in like what I call a single leg failure pattern that has the potential. So those are numbers that I'd be watching very closely. Now let's look at the TFZ, which is the iShares of the Russell 2000. What do they call it? The mini Russell 2000 December contract. Now that made a peak F top in the 120-minute chart. It's been pulling back. There's the down arrow right there. Now this contract right now is down $3. It made a peak E top in the daily chart. I've got this as a peak E for now. It broke out. It didn't make, double check, 83940, 840. No, it continued higher. So that is a peak E. Stochastic hasn't gone under 80%. It's 82% of the MACD. The MACD is still good in the Russell iShares 2000 December contract. But there could be an alternate wave count here. If we take, if the TFZ contract takes out 865.40, I have to consider that could really be a leg B up. And the weekly chart is saying, hey, I'm only in leg C. I could be a peak C if by tomorrow afternoon I don't make a new high. This is very good action. That means you've got to go to the root, and the root is the IWM. So what I'm going to be doing, and I'm going to also ask in the den if you have any questions on the commodities or the futures contracts, just post them in the den, and I'll try to get to them as soon as I can. Now, the weekly chart, now this is interesting. Does anyone here know whether or not the IWM, which is the Russell 2000 iShares Index Trust, where it is in its lifetime of the contract. Now, I've got the lifetime because the lifetime does not go back to anything but June of 2000. So I might be wrong about this, but I've got the chart in front of me, and the chart that I can see says, if I say to anyone that the IWM, the Russell 2000 Index, ETF, made all-time highs. That's the contract. This is the contract. So I do not have, I got the IWM. So, I can't go to the Qs. They traded differently. The Qs made an unbelievable high in the year 2000, in March of 2000. March of 2000 it was at 120.50. That's it's a third lower now. And it had been at $25. That's an 80% correction, right? Over 80%. So this is a spectacular move. It's the best that it's been. This is the Qs. Best it's been since 69.30. No, it's the best it's been since December of 2000. And at the same time, it is way under its all-time highs. So I do not know where the IWM all-time high was because I don't have it. But in the contract life, this is an all-time high. That's incredible, right? This is the worst economic time since they keep saying the Great Depression, and I keep saying, what are they talking about? Have they never read about or lived through the Great Depression? You can't even compare it. It's like not even apples and oranges. It's like apples and automobiles. No context there at all. Okay. So that's very interesting, and it's made a V-shaped formation, the Qs in the weekly chart, and it's in leg E. Now I'm going to introduce you to something else. If in the Chapman wave, this is leg C, there should be a D to come. That's very positive looking out in the monthly chart. Now let's go to something else that I'm going to introduce you to. For those of you, the first time you've heard me talk here on doing Larry's show, I'm going to go to. This is not quite there. I wanted it on the black chart, but I will show it here. In the S&P, which made a peak F top in the 120-minute chart and is pulling back. And I suspect it's going to last a little longer. I would not be too impressed with any rally right now. Just on a short-term basis, I think it needs to pull back. Look at the monthly chart. I'll do it in white so you can look at it in a different way. The monthly of the S&P. This is something that I've spoken about before. If you look at the chart of 1965 in the Dow to 1971 or 72, when the Dow finally broke out of that 1,000 range, we might be in this big range for a long time to come. Just sitting here bouncing sharply between these two variables of 1557 to 1576 to 1557, those two upside potential targets, and the downside could be between the 800s and the 666 level for all we know for the next couple of years. I'm going to talk about that as soon as we get back from this break. 877-927-6648. I'm going to talk about, since Larry will be, I believe, I might be wrong, but I believe he'll be back next week. I'm going to talk about some of the things that I'm looking at here. Although I've got all those futures that I wanted to look at, the commodities. I'll be back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, folks. In this last segment, what I'm going to do is just run through some of the things that I'm looking at. You can do in archive. This program's archive. You can check it out in the archive. The USO, which is the United States Oil Fund LP. Now, I don't trade oils. I use the USO as kind of a proxy for what I'm looking at in oil. This has said that there was a pattern. I don't want to get into it now. It's called the Chapman flat-based restart, and it had a perfect A, B, C to a D at 37.17 on the 14th and plop. That's what it says. It's going to go back and retest the most important low that started the new move up, which is at 34.34 on the 10th of August. It says it'll make like an arch formation. It'll go underneath that low, and it should, within 1 to 2 bars, come back and try to retest the most important low bar, in this case 34.34, and if that fails, it'll make a lower low. If it succeeds by not going to a low, to test the low that was made, but instead goes higher above an important level, in this case it would be the high of yesterday, 34.96, says then watch, because it could test the 9-period moving average at 35.30, and it should fail to go above the previous arch, which is 37.17, until it gets a brand new buy signal, which will come from the stochastic and the MACD. So that says USO has very limited, has very strong upside resistance between 35 and 35.45, and a close below 35.30. It also has strong support, and you look for the candle that's important at 39.90, because if it breaks that, it could go all the way to test the next most important left side low, which will be all the way down at 32.46. So those are parameters. Weekly chart says that because of the move that it's just had on the way down, that crude oil has made a leg D, which could turn into a peak D if there's a very strong close below the 9-period moving average, and the stochastic goes under 80%, and at this point it's at 89%. That says there should be a consolidation after the big gains, and that there should be very good support in the 32s. Then it should bounce and try, if the technicals are still good, to get back to 37.17. But at this particular point, that's not going to work unless it starts the daily. The daily has to improve, obviously, before the weekly can can strengthen. So that's that. Now, let's just go through this again. The E-minis, since this is about the futures. The weekly had a peak C1, C2. Here's another technique in the Chapman wave that those who understand quite well, that C2 is just basically a failure to make a D by a fraction. It comes down as if it was a peak D, very sharply starts a brand new up move. An up move right now I've got as leg C in the weekly, and that says it's positive, which takes me immediately to bonds. And bonds will be very important because we want to wrap up our show by looking at, how about I look at the TLT just for the moment, because it's just, I got a clearer picture of it with a notation. Bonds in the weekly chart says, and I looked at it and said between 121 and 190 was going to be very important. So far, it's held the 9-period, it's held the 9-period support today of 121, about 121.61, but it went way lower. It went to 118.05 on the 14th. This is the spring back after that arch formation test. That says that the previous candle of importance is the high of 123.09. If the TLT can break to the upside, close above 123.15, it says, great, now you can look to the next left side area of resistance, and that would be all the way up at 126.18. That is really far away. So one step at a time says that it's got to hold. If the TLT breaks under 120, closes under 120, again, this market is getting even higher. Listen to me tomorrow on my show at 11 o'clock for the Tiger Technicians Hour. I will teach you, I'll show you how you can use the volatility index and some other indexes to be able to gauge what's happening. I like the market right now. I think it's going higher. Thanks for being here. Basil Chapman sitting for Larry Pesavento. Have a great day, and I'll be back tomorrow at 11 o'clock.